Welcome to my channel Say Gayatri's Academy, and today we are going to discuss on a very important topic, that is golden rule, and which is in accountancy. Any student who is beginning of the accountancy or in class 11 12 students, they have to first do the golden rule to understand how to generalize any transactions. Let's begin with the chapter. Okay, just let me discuss some points. First, what we do when we are starting up with the accounts, we have to know how to generalize a transaction. But what happens, we first of all go to the know what is a nominal account, real account, personal account. Yes, we have to know them, but students, what do? They just try to muck up the whole matter, which is a nominal account, which is a real account, which is a personal account. They don't understand it, and during the examinations or when they have to, in practical sense, they have to do the transactions, they're not able to do it because they're not aware of the fact about the concept is not known to them. So to make the thing simple and to make the children understand in a better way, I've just present in a form so that you can understand in a very easy and simple way how to generalize a particular transaction. Okay, let's start off the topic. We will do in details. We will also study about the concepts of what is a nominal account, what is a personal account, what is a real account. But first of all, how to do it in a simple and a rather very easy way, we will see to it. Let's start. So what happens? Head of accounts divide into 5 parts. What are the simple way of generalizing transaction? Assets, expenses and losses, capital, revenue and liabilities, right? So what happens? This 5, all the heads of accounts we have divided into 5 parts. One is the asset part, second is expense and losses, third is capital, revenue and liabilities. Now we are going to give how to generalize in transaction on this basis. Okay, for assets, what happens when assets come while generalizing? For an increase in asset, if there is an asset, for example, you buy a car. Okay, so for increase in an asset, we debit it. Okay, so car account debit to, if you buy it in check, then you will bank. If you buy in cash, it will be cash, whatever it is. So the car account debit to bank. Okay, so that is a purchase entry. So what happens is increase in the asset, so it will be debited, and what is credited? The amount which you have given. Now for a decrease in asset, if an asset is sold out, what will we do? Bank to asset, because money comes in and the asset goes out. Okay, so for an increase, always remember, if there is an asset, we are dealing with an asset, then if there is an increase in the asset, then debit that asset. Okay, and if there is a decrease in the asset, then credit the asset. Okay. Second is for expenses and losses. In any transaction, you can see there are many expenses and losses. So this expenses and losses have to be treated in a manner. If there is an increase in any expense or the loss is increased, okay, remember that any loss or expenses will be the same treatment. If there is an increase in the asset, that was a different issue, but when we are dealing with expenses or any losses, in that case, if any increase in expense or loss, in that case, what we will do? We will debit the item. For example, the expenses of repairing has increased, so repairing account debit to cash, like this. So we will debit that item of expense or loss when it is increases, and if there is a decrease in the value of any expense or loss, for example, the expense of which we were seeming to be more but it came out to be less, in that way we have to credit it, right? Same way, if losses are less, or you can say gain is there, then you can have to credit the entry. For capital, revenue and liabilities, assets, expense, loss were given same type of treatment, and now we are dealing with capital and revenue and liabilities. What are capital? That is the business has brought in the capital into the business, what amount is invested in the whole business, that is a capital. Revenue, whatever income the business is doing, and liabilities, whatever have the small things they have to pay for, liabilities, obligations rest over. So in this case it will be different. What treatment is given? If there is an increase in the capital or revenue or liabilities, 3 of them, we will credit it. Okay, if there is an increase in the capital part or revenue part or liabilities part, we will credit it, and if there is a decrease in the capital amount, revenue amount or the liabilities, then we will debited. This is an opposite entry, so always remember that. Simple way to remember how to do a transaction easily without wasting much time. What is that? During examinations you have a big paper to give, you don't have time, so what will you do? Just in your mind, whether it is an asset or liability or expense, or whether it comes under capital, revenue, liabilities. And just likewise, if there is an increase in asset, loss and expense, debit it. It decrease, then credit it. And if it is an item of capital, revenue or liabilities, if it increases, credit it. If it decreases, debit it. Okay, so this was the simple funda, or you can say simple way how to deal with a transaction when you don't understand. But now we are going to deal with details about the concept. We have to know which account is what. In examinations we also asked which asset item falls under which head. So in that case we have to know which is a personal account, what is a nominal account, what is a real account. Okay, we cannot do without it, right? Let's do it in details. Yes, personal account, real account and nominal accounts. We have three accounts. So personal accounts we mainly deal with related to individuals or entities. Any individuals, if you are deals with any individual or entities, it is a personal account. The debit entry represents the account receiving value. Okay, the accounts receiving value, while the credit entry represents the account giving value. So whatever is credited means the giving value, and whatever is debited means the debit value, right? Receiving is debited always. Real account, these are concerned with assets, both tangible assets as well as intangible assets. Here let me tell you what is tangible assets. Any asset which you can see or touch or which is visible, that is a tangible asset. Table, chair, anything. And intangible assets which are not seen, which cannot be felt, but its importance is felt in the business, just like goodwill. Reputation, of a business, if it continues to do profit just because of its goodwill, so that is an intangible asset. Okay, then royalty on this. The debit entry represents the acquisition of assets. The debit entry represents the acquisition of assets. If an asset increase, the debit entry comes here, and the credit entry represents the disposal of assets. Just I just told you, if it is an asset, if it increases, debit it. If it is a decreases, credit. So here real account deals with assets. Real account assets deal करता है. So it is both considering both goodwill, intangible assets में है, और tangible assets, any furniture, whatever you say. The debit entry will be representing the acquisition of assets, and the credit entry is the disposal of the asset. Disposal of asset means sale of the asset. Now the third is the nominal account. So nominal account क्या समझते हैं हम? क्या करते हैं एग्जाम में, हम जस्ट बोलते हैं ये इसके अंदर पर्सनल अकाउंट है, ऐसे लर्न कर लेते हैं बहुत सारे, और बट वी कैन नॉट रिमेंबर देम व्हाट इज एक्चुअली. मगिंग अप करने से यू वोंट बी एबल टू आंसर योरसेल्फ आफ्टर सम डेज. सो ट्राई टू अंडरस्टैंड व्हाट कम्स अंडर व्हाट. पर्सनल मतलब पर्सनल आइडेंटिटी क्या है, इंडिविजुअल्स और एंटिटीज, एनी ऑर्गेनाइजेशन को बता रहा है, कोई भी इंडिविजुअल बता रहा है. रियल मीन्स एसेट्स, and the rest part is nominal accounts, pertains to income, expense, gains and losses. So कोई भी income, कोई भी expense, कोई भी gains, whatever losses, all these come under nominal accounts. Expense and losses are debited, whereas income and gains are credited. Yes, this opposite transactions are given for income and expense. So just we see expenses and losses are debited, whereas income and gains are credited. Okay, this tells us the golden rule. What we follow in golden rule in accountancy is about these three accounts: personal account, real account and nominal accounts, how they are given treatment to. So if an expense or loss is increases, then it will be debited, but if it is an income or it is a gain, then it will be credited. If it is an increase in an income or a gain, then it will be credited. So it is a just opposite transaction. This tells you about the golden rules of accounting. In accounting, the golden rules are fundamental principles that guide the recording of financial transactions. So golden rules are the what? The fundamental principles that guide the recording of financial transactions. Right? There are three main rules, each corresponding to a different type of account. Rule of personal account. अभी हमने जो किया, what is a real account? You understood real account deals with assets. Okay. Nominal accounts deals with expenses, income, loss, gain, and the personal account, individuals and identities. Okay, now let's do the rule for personal accounts. I mean, golden rule. What does it say? Debit the receiver, credit the giver. Okay, debit the receiver, whoever receiving it, जिसको पैसा मिलेगा, right? Whoever is getting the money, that will be debited, and credit the giver, जो देगा पैसा उसको क्रेडिट करना है, ठीक है। दिस रूल्स अप्लाइज टू अकाउंट्स रिलेटेड टू इंडिविजुअल्स, firms, or any entity that can be considered a receiver or giver in a transaction. Receiver will always be debited and the giver will always be credited, ठीक है। It will be an individual, be a firm or any entity, ठीक है। For example, if you receive cash from a customer, ठीक है, receive cash from a customer, who is the receiver here? You. So you will be your account will be debited. Who is the giver here? The customer. That account will be created. Let's see. If you have received cash from a customer, you debit the cash account receiver and credit the accounts receivable of the sales account giver. Whoever the person is giving the money will be created and your account will be debited. So your account, for example, you are Raj. The Raj account debit to cash. Okay. The customers, if name is given there. Rule of real accounts that deals with assets. Debit what comes in, credit what goes out. Whatever comes in means any purchase of any asset, cash coming in, any donation given, anything whatever we are buying, machinery, building, all these are real accounts, come under real account. So debit whatever comes in and whatever goes out, credit. Okay. So real account deals with assets like cash, machinery, building, etc. When an asset is acquired or comes in, you debit the asset account, right? You debit the asset account. Conversely, when an asset is disposed of or sold out or goes out, you credit the asset account. Same. So when we purchase anything, what we do? Debit the account and to cash. For example, we are buying a table fan for rupees 20,000, right? So table fan account debit to cash. Okay. This is debited the entry of the table fan because it came in. Now we are selling it of the table fan after some years. So what will be that? Bank to table fan. The table fan will be credited because it is going off or it is sold, right? Hope it is being clear to you. Then rule for nominal accounts. Debit all expenses and losses when there is an increase. Debit all expenses and losses and credit all income and gains. When it comes to expense and losses, the treatment will be, if there is an increase, it will be debited, decrease, credited. But it is vice versa for the case of income and gains. If there is an increase in income or gains, then it will be credited, and if there is a decrease in income or gain, it will be debited. Nominal accounts track income, expense, gains and losses. Expenses and losses are recorded on the debit side, while income and gains are recorded on the credit side. Obviously, we just did, if there, for example, there is a expense of rupees, I just did about the repairing of services, repairing service account debit to cash, so it is debited. Again, if there is an income, for example, a customer comes in and gave you 50,000 rupees, so that money comes in, okay. So what will be that? That will be gain, and you sold it for 1,50,000. The item costed 1 lakh. So 50,000 is a profit. That is a gain. So what will you do? You will credit that gain. Okay. So what will you do? You received how much money and how much. So the for example, it was a machinery. Machinery, you sold it. So what will be the entry? Machinery. So the money is coming. Okay, money is coming. So here we are going to see the portion of profit. So the profit will be credited. When it increases, then it will be credited, and when it decreases, then it will be credited. So increase in profit will be always credited. So bank account debit to that profit amount that will become comes into our account, right? Here's a table layout that summarizes the American method of golden rule of accounting. Let's see what they are saying. Personal account golden rule में क्या बोल रहे हैं? Debit the receiver, credit the giver. Okay, debit the receiver. Whoever receiving the money will be debited, and whoever giving the money will be credited. If you receive cash from a customer, debit the cash account receiver and credit the account to receivable or sales account giver. Who is giving money will be credited. Okay. Real accounts, debit what comes in and credit what goes out. Okay, if you are buying an equipment, debit the equipment account what comes in and credit the cash account or accounts payable what goes out. What is going out? The money is going out, and what is coming in? The furniture is coming in, so furniture account debit to cash, right? Nominal account debit all expenses and losses. Whatever expenses and losses are incurred, debit them. We have done in profit and loss. You will just be doing profit and loss account. That all you have to debit all the expenses. Two in the trading account and profit and loss account. You do write 2 expenses, so it is debited, right? And in the case of losses and income, we always write in the by, we just write with every income and gains are credited. Okay, if you pay rent, debit the rent expense account expenses and credit the cash account payment. Conversely, if you earn interest income, credit the interest income account, credit, it will be created, and debit the cash account receipt. Okay, so I hope this is very much clear what is a personal account, what is a real account, and what is a nominal account. Okay, and how the treatment we are giving. Always remember, assets are, all the accounts are divided into three accounts: personal accounts, real accounts, and nominal accounts. In this three, you first divide, and after that, if they are, you are asked any question which account it comes. So if it is deals with personal accounts, debit the receiver, credit the giver. Real accounts, debit the what comes in, credit what goes out. Nominal accounts, debit all expenses and losses and credit all incomes and gains. This is what you have to remember for golden rule, right? And if dealing with an examination paper, if you are asked about any question which comes under which head, you can very well answer whether it is personal, whether real, or whether nominal, right? You can answer those questions and what treatment have to be given. And in an examination, if you do have to deal with any transaction, simply you have to generalize the transaction. In that case, you are not able to understand what to do. In that case, follow the step: assets, losses, and expenses will be treated. If they increase, it will be debited. If they decrease, it will be credited. And if in the case of revenue, capital, and liabilities, if there is an increase in the capital expense and capital, revenue, and income, then it will be credited. And if there is a decrease, then it will be debited. Hope it is clear. Thanks for watching.